do I do this? Okay, this is the start to an entire trading like course, model, whatever you want to call it. This is going to be the beginning of it. Um, we're going to basically learn everything that is basically needed to start kind of understanding where the market might want to go or how it might get there. So, first of all, we have to learn what a candle is. So, a candle, I'm going to just draw a little box here. So a candle kind of looks like this, right? We have our wick up here, and we have our wick down here, right? So this is a candle. Mine is black, but obviously right here, you can see to the left side of my screen, we got my up candles are orange and my down candles are black. So we got orange candles. This would technically be green and red, but I have them as orange and black, and you can change the colors however you like in the settings over here. So what this means is that these are Japanese traditional candlesticks. So this is our forgive my writing. Wick, wick high, body low, wick low. So you have your wicks, wick low, wick high, body low. These aren't very important besides the wicks. So the wicks actually are a little bit more important than like the body, sort of. They're kind of both important, but you'll see what I mean here in a second. So if our body closes like this wick gets a lot bigger. So for example, right here, we could be showing signs of rejection of something, maybe like a PD array over here or something over here, or whatever's going on over here, right? We are showing signs of rejection from that certain thing, right? Same thing will go like this way, right? Boom. Now this wick gets longer. So now we're showing signs of rejection of something down here, right? So it's very basic, but it can show a lot of things, especially on higher time frames. But for example, what you just saw was like, boom, we can see this right here. We're getting all these wicks, right? We're closing, right? Boom, right here too. Like, this really doesn't mean anything, and you don't really have to use it, but it's just something easy to see, right? Boom, we're rejecting this. We're going to move down. Boom, rejecting here. Boom, boom. We just got this big dump, right? Boom, boom. Rejecting. Just bigger, bigger wicks on top, bigger wicks on bottom usually shows that we're kind of moving the other way. So what we can do about these candlesticks is we can move to the higher time frames. So with this, I have this handy little indicator here that shows the entire daily candle. So the entire daily candle, obviously, is just going to be a bunch of candlesticks on the daily chart. So, well, basically, the idea is that you can catch like kind of the daily range with kind of guessing where this candle is. So, for example, we opened last night. We opened right here. So kind of let it play out for a while. We're moving up. So most likely our target tonight or the target tomorrow is probably just going to be, this low down here. Because we have an open, high, low, close and open, low, high, close. So an open, low, high, close would be something like this, right? Open, high, low, close. That's your open. I'll mark it out for you. Open, high, low, close, right? Open, high, low, close. This is what we want to call a bearish candle. So a bearish candle is going to look like this. I'll type in bearish for you guys. Bearish also means like down. So bearish / down candle right here. And then we have open, low, high, close. So I'm sure they can imagine this is our bullish candle. So bullish candle. And what we can do with these is hopefully is kind of already sticking out to you, right? We want to enter, we want to enter here and we want to enter down here or maybe somewhere here, here, here. But we want to catch this whole move right here, obviously, like this and like that, right? We want to do either one of these two things. So by learning that we're opening higher, there's different ways to understand why we're going to go to a certain price and why we're not, but we're not going to get into that today. But by basically, we are opening down here, we're making that high overnight, and then we come to, sorry, it's taking a second. We made that high overnight. Look, we're in that downtrend already, and we're most likely going to come down to this low right here. I set a buy limit here, so you'll know when it, boom, right there, right? So we obviously, don't mind that. I don't know why I had that there. We obviously had that dump down, and now we have that bearish candle we were talking about, right? Another example, last night, or not last night, sorry, the other night, boom, we're open up high, right? We're making this candle wick. We're making this wick here, and we're making the wick down there. Or we're not making a very big wick down there. So what a basic candlestick looks like is like this, right? It's kind of like this. You gotta have your big candle wick up there, and you gotta have your big candle wick up there. Actually, perfectly like my indicator right here. We have to have that. That's a perfect candlestick. Is that gonna happen every time? No, obviously it's not gonna happen every time. You can look at it like that, but we can use that general information to understand that we're making this big candle, and it's most likely gotta go down and make that wick below here. So that's why a lot of people like to use the midnight open and the daily open for kind of like draws on liquidity. Draws on liquidity as in like a target that you're going to target basically. So if I were to enter a trade right here, I would target this low because that's the opening of this candle, and I think this candle needs to be bearish because we're already overextended and we're also making that high right now. So let's just see if I was right. So making a high, London puts in that high, and then we are bearish candle. So that's just how you can use candlesticks. They're really easy. It's nothing complicated. You can also go on the 4-hour. You can also use 4-hour, on this indicator. All you got to do is come in and boom, change it to 4 hours. This indicator is PO3 by 2 degrees or something like that. I think that's how you spell it. But this is the indicator. You can use 10 a.m. open as well for the same thing, right? So we're putting in a big bottom wick. Most likely we might go up, right? We got to put in that top wick sometime, and we never did. So I guess I don't know what I'm talking about. But anyways, I'm just kidding. But we made that bottom wick right there, and now we're pumping up to finish out the entire candle. Made that bottom wick again. Most likely probably going to go up. So yeah, pretty simple stuff. I don't think I'm going to fit liquidity in here. I think that's going to be another video, but just to go over some homework for you guys. Check out the daily chart and just see how basic candles form, right? Or you can go to the 15-minute and kind of just obviously get that indicator I was talking about. So you can see, okay, Asia opened up. We're making a bunch of lows. Let me get rid of this real quick. Where the hell? Alright, whatever. I'll just do this. We're making a bunch of lows. So most likely in our daily candle, we're going to have to go up. Very, very low. We're most likely going to have to put in something up here, right? So then you could have just caught this whole move, right? So it's very simple. Always target the daily open or the midnight open. It's very easy. So